We're back, ladies and gentlemen. Welcome back to another video. If you guys are unaware, I didn't make a video yesterday because my first son was born. His name's Emerson, and what a process. Oh my gosh. 39 hours total from the start to the finish, but he's finally here. Healthy, like 5 pounds, 11 ounces, so a little bit on the small side. But wow, shout out to the moms out there because that did not look like a lot of fun. Now, nonetheless, I was very active in the markets on Friday in the trading group, and I was really paying attention to everything that happened Friday because Friday was a very important day for a couple reasons we'll talk about here in this video. Not only in the broad markets, but as well as with AMC stock. AMC is sound and resilient. I know I sound like a politician in the banking sector, but I think that is a good way to talk about AMC after what we've seen on Friday. AMC stock is virtually flat, whereas a lot of stocks were down a lot. AMC is holding on to the bullish uptrend, and we'll talk about that as well as go over all of the data that you need to know here in this video. Guys, nonetheless, I am excited to be back. I love doing this, and you know, even taking one day off feels out of place. So let's get into this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. So AMC stock, let's talk about AMC here briefly. AMC was down 0.97% in regular trading yesterday, up 0.70% in after hours. Virtually flat on the day. Down 4 cents, up 4 cents. Nothing really happened. But that is very important because at points on Friday, yeah, AMC stock did break down lower, but as soon as you got in that demand zone of, call it under $5 to $4.80 per share, really that place where a lot of people expect AMC to bounce from, AMC seen that bounce almost perfectly at $4.96 per share. A vast majority of the day, you stayed above $5 per share. Now, what you seen yesterday was some pretty dovish, hawkish, I guess, comments from Fed Jerome Powell. We'll talk about exactly what he said and what really stuck out to me. But the biggest driver of Friday was not Powell like we thought it was going to be. It was debt ceiling news as well as Janet Yellen. Janet Yellen, good old young Janet Yellen, she came out and said that there may need to be more mergers in the banking sector. This took down banks by a lot. And if you look at the KRE, that is the regional bank index, you can see that was down about 2%. It did recover at, after this initial fall, but the comments basically came out right here, right? So you've seen an instant drawdown in the KRE of about 3.5%. And banks like PacWest, Western Alliance, your smaller regional banks really started to nosedive because that's not sound and resilient if you need more bank mergers potentially. So who's the next domino to fall? Well, that's what the markets were kind of freaking out about right here, and it did bring everything down. Now, on top of that, the big story of Friday was the debt ceiling, and really the lack of news on the debt ceiling. The White House Republican teams say no progress in debt ceiling talks, and the key points go on to say, quote, a second meeting on Friday between White House and Republican congressional negotiators on raising the federal government's $31.4 trillion debt ceiling broke up with no progress cited by either side and no additional meeting set. That came at the end of the day of acrimonious talks that were broken off for several hours with less than 2 weeks to go before June 1st, with the Treasury Department warned that the federal government could be unable to pay its debts. That would trigger a calamitous default. Now, why this is really important is because I believe it's Wednesday or Thursday next week that Congress goes on recess. So a lot of people are saying, hey, if we don't get a debt ceiling bill on the floor, then it's going to come this week, like this next upcoming week, Monday, Tuesday. You're going to see a last minute deal or potentially see that default. Now, even coming close to a default is negative. Even getting the debt ceiling raised could be negative because I wouldn't say a huge reason why this market is rallying, but a decent reason why this market is rallying is because of government spending, right? The stimulus is switched from average people, average Americans getting stimulus checks and unemployment benefits and all of that, now to businesses getting tax credits and businesses, different things. And that's all being negotiated, right? So that could also be important how this deal actually does come out. And a big thing that stuck out to me in Kevin McCarthy's statements of, what happened on Friday, why Republicans walked out of the meeting. That's not a good sign. Kevin McCarthy said, "We want the budget this year to be smaller than the one last year." So looks like Democrats don't want to stop spending money. I mean, that's just the bottom line there. And that looks to be a pretty big sticking point with this debt ceiling. So that's what we want to watch for in the next week ahead. The debt ceiling getting close to or defaulting on the debt ceiling could cause a 20 to 50% down move in the markets. And that's a pretty big deal. Although there's like a 2% chance we actually do default, which is historically the highest it's ever been. It's not going to happen. Like, you should not bet on the United States defaulting. They will come together, even if there's an hour left, and, sign a kick the can down the road kind of bill. But nonetheless, it can cause a lot of volatility in the markets, and it could be a buy the rumor, sell the news kind of event, as well as Fed Jerome Powell. Like I said, you also got him Friday. So it was a very eventful day as far as headlines and politics and all of that. The markets, obviously, Russell 2000, he has been the black sheep of the family, down negative 0.62%. NASDAQ closed down a quarter. S&P 500 closed down 0.14%. And the Dow closed down 0.33%. Now, in this next upcoming week, in regards to a collateral crisis, I think the debt ceiling, that's bad news no matter which way you put it. Right? I can't make a bullish outcome after the NASDAQ has hit a new 52-week high and the S&P 500 is very close to a new 52-week high. You've priced in the good news from the debt ceiling. Most of it, I would say. So I don't really look at that as a huge bullish catalyst at this point in time. Now, what is really holding up this market? It's all about AI. So if you're thinking about a collateral crisis, if you want to squeeze out dollars in the markets to get or incentivize shorts to cover on their short positions, make capital more expensive and harder to come by, meaning less money to back collateral in short positions, or just less money to be short in short positions. Much the same as, Volkswagen or any of the other short squeezes that happened at the lows of markets in history, right? That's when you tend to get the biggest short squeezes, is when stocks are crashing, believe that or not. It's all about AI. Now, AI is going to be a big theme of this next week. And you're going to have Zoom. I wouldn't say they're too big in AI, but you're going to have Palo Alto, as well as Snowflake, Analog Devices, and NVIDIA. Now, who is this? Palo Alto is going to be on Tuesday. Wednesday is going to be your big AI day, if I were to narrow it down to one day. Analog Devices, pre-market. NVIDIA, Wednesday after hours, and Snowflake as well after hours. These are really the earnings that I care about. Sure, Lowe's and Costco and Best Buy and Big Lots and Dollar Tree and these, retailers can be important too. It's all about the AI. If you want to squeeze shorts, if you want to get a collateral crisis, it's all about the AI. Now, I'll tell you right now, these AI stocks are, a lot of them at new all-time highs or very close to it, like NVIDIA and Snowflake, right? Analog Devices. So I think it's a buy the rumor, sell the news kind of event, but it all depends on what they have to say about AI going ahead, guys. So there is that, and that is the single biggest thing that is propping this market up. If AI had not become this new, I guess you could call it fad in 2023, markets would still be down huge right now. And you wouldn't have seen this rally, guys. So there you have that. And that is something that I really want to watch closely. That's something that kind of gave back a little bit on Friday. NVIDIA was down. A lot of AI kind of stocks were down. But you seen a bid from oil companies and healthcare and smaller sectors in there as well. So there is that. Now, I do want to switch hands and talk about AMC stock here briefly as well, because I firmly believe in the collateral crisis. Now, I don't ask you guys to believe in it. I don't care if you believe in it. I really don't. But I that's the most logical thing to me right now is there's a lot of capital out there. A lot of capital is highly condensed in a couple names: Microsoft, Apple, NVIDIA at this point, Facebook, Google, these stocks that have benefited massively from AI. I think when that domino falls, you're going to get a lot of pressure on shorts to fund new, capital, right? To get their hands on new capital, especially when those stocks fall. The requirements to back short positions are variable. It's not like you buy a house and you pay the same payment forever. No, when you take on a short position, if you have, call it an adjustable rate mortgage. Well, if the value of whatever, you're shorting or whatnot, if it's $10 million of AMC, if your collateral is $10 million, but now it just got cut a third, right? You're going to have to put up a lot more collateral to fund that short position. So I do think this is a big deal. Now, let's get into what the data looks like with AMC, and then we'll move on to the charts as well. So the live short interest of free float sitting at 24.84%, 128.26 million shares that are currently sold short. Cost of our average 62.51%. Cost of our max 115.35%. Cost of our minimum at about 8%. Interactive Brokers short availability has 1 million shares currently available with a cost of our fee of 65.16%. And if we took a look at the option activity for Friday as well, you will see 8 orders totaling $10.34 million, positive order value of 5%. No shocker here. The $10 puts are being attacked. Yet again, a $3.62 million trade right here. Again, at the $10 put. And the $10 put right here, a $4 million trade. A $1.86 million trade. Multiple $500,000 plus trades as well, all targeting that $10 strike. So it's clear here. Shorts are trying to do whatever they possibly can to keep AMC stock down. And even if you look at the charts, like I said, once you get to that demand zone under $5 per share, AMC stock has bounced from that. And really this demand zone in lines with the last low that we've seen with AMC, which the last technical low you've seen was, what is the technical low? $4.64 per share. As long as you stay above that, you're technically making a higher low. That is technically a bullish pattern. Now, the special mastery or GME earnings or couple different catalysts could really catapult AMC to that next level or drop the stock from here. But I think the strength that you've seen on Friday is an overwhelmingly good sign. MACD in pretty good territory as well, above this neutral level right here. It's not negative, but on a short-term basis, the yellow line is below the blue line, a little bit on the negative side, and the RSI is at 43.60, which is under that neutral level of 50. So really indicating that we should be seeing a bounce sometime in the near term future. Again, volume, 10.6 million on Friday. The option activity that we have been seeing is controlling millions of shares that have to be short on AMC every single day. The volume is the key. Once volume heads back into AMC stock, you are going to get a rally. Look at it like this. Back here, right after things kind of leveled out from the drop and the court situation that we've seen back here from March 14th through, April 4th. We got some bad news. Stock dropped 23.5% that day. Once you leveled out, you've seen volume pick up. And on the highest of volume days, you were at, 28 million for volume, and you hit $6.11 per share. And that was only 28 million for volume. You literally ramped up from 14 million to 28 million. The volume doubled, and the price of AMC went from about $4, what is that, $4.66 to $6.11. And if you look at the percentage gain on that, that's a percentage gain of about 30%. So just imagine if the volume does, or when it does, I should say, 5 or 10x from our current levels, give you 100 million shares that trade hands. The stock's going to go absolutely nutty. The stock's going to go crazy, and that is what I am looking forward to next, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.